All right, so this is my first video and also my first time using Epic Pen, so bear with me a little bit, but appreciate it. I got inspired by watching Tyler's awesome videos that he made yesterday, and then I was trying to, and listening to Thor a lot, and then I was trying to explain how I interpret VPOC to Charles, and I think he got it, but I just wanted to make this video for others and to kind of for my own peace of mind to just kind of get all my thoughts out. So I'm going to go through how I see VPOC and then my ideas on how I want to play it around that and how I'm tweaking my system and changing it slightly from how I was originally doing it. So over here on the left side, we're going to have our volume by price bars over here. So they're going to look something like this, right? Something like that, right? It's always like the high and lows are shorter. In the middle, the is usually a bigger one, right? Which is going to put our VPOC right here in the middle. That line should be straight, right? And so to me, price is just constantly chopping between this around this VPOC, right? And it gets bigger, it goes like this, right? It does all kinds of stuff. It can compress here, go up a little bit, come back. It can do all kinds of stuff, right? Compress down here, come down, fake breakouts, whatever you want to call it, right? But really, it's a market maker trying to get as many transactions to go through as possible. And they know that in the middle of this range is where they can get the most transactions to go through. And something I've noticed before, and I don't know if any of you have ever noticed this before, but say like right here is like $50, just for example, of whatever stock you're trading. So as this is coming up, you'll see a big bid pop up at 50, right? And then price gets up, but there's no more bids, so it comes back, and you might even see that bid again, but this time it goes down below it, and you're like totally confused. You're like, well, here the bid, some of that went through at $50 and it made it go up, and now the bid's going through again, but now it's going down, and then it comes back to it, it's still there, it goes up, right? All that is a market maker just trying to do as many transactions right here at this level that it can, and so price is going to move around it, but then return back to it until the bids are satisfied there, or and asks, I guess, are satisfied until there's not enough transactions for the market maker to really keep it there, right? Then once that happens, then the market maker is going to have to explore prices down below, down that way, or they're going to have to bring it up and try to explore prices above. But that's an arrow. That's a pretty bad arrow. But anyway, but anyway, so like again, it can it can do all kinds of things around VPOC right here, right? So it can come down here and go up here and all this stuff, right? And you basically just get these waves right this, right? And that is how, to me, that is how we make levels, right? Then we look at things and we're like, wow, look at this level at $50.50. Look at this level at $49.50, right? But then how come at $50 it's all crazy, right? You can't really draw a level out of that. To me, that is why these levels are formed. So it might be that this is a level to play off of, but really the action is all happening in this like range, right? Um, and so, and then going back before I move on to the next part, right, is say like there's not enough liquidity. They try to bring it up here and it's like a failed breakout and it comes back down. It's just going to shoot all the way back down through here. And then it's going to go explore prices in a range below, right? And so you'll look on, like if you scroll out on like a 15 or a 5-minute chart or something like that from the past few days, typically you'll see a whole nother value zone down below, right? Just like that. And you'll see, if you like put the right time frame on, you'll see another VPOC down there, right? And so basically, price isn't going to come back down and explore here. And we probably even have a level drawn right here from previous sessions, both sides. So when we see this, we're going to go, should we play a bounce right here? Well, yeah, maybe that might not be a bad thing. Maybe we let it bounce, we let it come up to this range, and then we short at the rejection of here, right? To come back down in here to then hope that it gets back into this range. But to me, once it loses this value range up here, it's going down to this one. It wants to go touch this value right here at this VPOC line. To me, it wants to test to see, can we hold that line, right? Sometimes it'll test just the top of this range and say, all right, hey, we held the top, we're good, let's go back. And maybe it's enough to get it back into this range and we go around in here again, right? Maybe not, right? But to me, it does that. And sometimes it'll do this, sometimes it'll do this down here, right? But that's how this works, right? And basically you're working on L2 skills, you're working on time and sales skills, large prints, whatever, but basically that's how I'm seeing it. That is how levels are formed around those VPOC lines. Now, to talk a little bit how I've been trading, I'm going to use this one down here for now. So what I've been doing to trade is I have been watching price at VPOC and trying to wait for a large high volume hammer like right here to go long. So say like the price is basically just chopping around VPOC right here or something like that, right? Or it broke out long. Let me, sorry, first timer here on Epic then, but say like try to break out long, it can't. Whatever does this. And then all of a sudden right here we get this high volume hammer. I would get long at the new high of this, and I'm trying to play a move back to the top of the value zone right here. So new high, get long, sell at the top, right? What Thor does, what Tyler does, and what I am now trying to do is add to my arsenal of let it come up here, reject the highs, and then play the rejection back down to here, because now you have a chance of when it comes back down to this VPOC line, it could then chop here and then go down to the low. So you actually have like a better move to get. Like there's more potential. I mean, obviously, right? This is basically half of the move of this, right? It's a little longer of a trade. To me, I find that it's easier for me to read these like high volume hammers off of VPOC and really be able to predict it going up or down, right? If it's a upside down hammer. But up here, I'm having a really hard time finding good signals and figuring out what I need to look for to then signal that it's ready to come back down to value, or the opposite, right? What's it doing down here that's going to push it back to value and then push it back up to the top of the range again? So that's what I'm working on. Um, that's the difference of plays. So this one I call basically acceptance of value. So this is a hammer right on VPOC. It's accepting value and it's going to move higher. And I'm going to sell at the top of the range. Same thing with like a rejection candle. It'd be like a high volume upside down hammer right here. It just occurred to me that I'm using yellow on all this, so I apologize if you can't see it very well. But if this was a high volume upside down hammer, then I'd go short at a new low, and I'd go all the way to the low of the value zone, and I'd get all out, right? So that would be a rejection of value. So I got acceptance of value and I got rejection of value. Versus these plays are more like a return to value. So I would call this like a short return to value. Um, Not meaning like time frame short, but I'm getting short to return to value and then possibly have a move lower. Versus right here, I'm getting long for a move back to value and possibly a move higher. So I'm going through a transition, trying to change a little bit, which always means you learn new things. It takes a little time to get used to it. You're looking at different signals. You kind of got to read things a little differently. You got to look at things a little bit differently. And it's hard, right? When price is down here to say, I'm going long is hard, right? When price is way up here to say, I'm going short, that's hard, right? Like, how do you know that this acceptance of value play is actually going to reject here? How do you know it's not just going to keep going up here, right? Like, it very well could. So I've got a lot of work to do as far as like figuring out how to do all those. But anyway, that's my thoughts. That's what I'm working on. That's all I got at the moment. I'm working on it. If you got any thoughts, please come talk to me. Would love to talk to you about it. Thanks for listening.